Hello and welcome to the weekly wrap video. Just a couple of things to catch you up on then from the past 5 trading sessions. Saw a slew of central bank releases this week, with Tuesday seeing Janet Yellen's first appearance as part of a semi-annual testimony as her new position of the chair of the Federal Reserve. So Yellen struck a pretty strong note that there is going to be a lot of policy continuity in the transition from Bernanke into Yellen's chairmanship, and as such this $10 billion per meeting taper is likely to stay the course. That was really the take-home message from Janet Yellen. We were going to see the second half of her semi-annual testimony on Thursday. However, that was postponed due to the very adverse weather conditions over in the US, as again New York is brought to a standstill by ice, cold winds and heavy snowfall. And then on Wednesday we had Mark Carney in the Bank of England issuing their latest quarterly inflation report. They actually moved against expectations by holding the 7.0% jobless rate threshold and instead adopting a slightly fuzzier set of guidance, with a focus turning from the unemployment market and onto spare capacity within the UK economy. So Mark Carney and the MPC have justified keeping rates low, below that 7.0% unemployment rate, due to the slack in output that the UK does need to fill before it can accommodate a rate hike. And as part of this, the BE will look at some further measures, the likes of the actual composition of the jobs market, business surveys, as well as underemployment as opposed to unemployment. So it looks to be a bit of a fuzzier guidance here. And in reaction to this, the sterling currency did actually strengthen, touching multi-year highs, with sterling above 167 in terms of cable for the first time since 2011. And then we move on to the ECB on Thursday. It's now a bit of a mixed data picture here. We have the survey of professional forecasters that slashed their 2014 inflation estimates as part of the ECB's monthly bulletin. However, this was counted on Friday by a slightly better than expected Eurozone GDP number. So we had French, Portuguese, Dutch and German GDP all coming in higher than expected for their preliminary Q4 readings. So slightly firmer growth, but still declining inflation, gives a bit of a mixed picture for the ECB and as to whether taking further action is necessary. So the real onus is on whether this slight slip up in inflation is a temporary or a permanent factor for the European Monetary Union. But we're going to look ahead to the rest of next week's releases then. We get a number of central bank releases once more. We have the Fed minutes there, not expected to show anything too surprising. Possibly a bit of a discussion on their 6.5% jobless rate threshold. The BOE minutes, where they're expected to have acted unanimously at the February quarterly inflation report to keep that jobless threshold in the UK as 7.0%. And of course the Bank of Japan meeting, where they're expected to make no changes, and as we have seen an uptick in inflation in Japan for the first time in quite a few years. But of course I'll brief you on those fully next Monday in the warm-up to the week video, but in the meantime I hope you have a fantastic weekend.